All right, what's happening, guys? Jesse here. We are back for another episode of Sensible Investing. Today, we've got an absolutely content-packed episode, so I've created a little agenda for you guys, all right? And so the agenda is we're going to be talking about stimulus, okay? We're going to be talking about stimulus round two, what's involved, why the market needs more stimulus. We're going to be talking about some macro data, especially some coronavirus macro data, just to see whether the situation is manageable or how bad it could get, and then how that then influences whether I'm planning to buy more stocks or wait for a better opportunity. Okay, guys? So, content-packed episode. Let's get straight into it, and then don't forget, like, subscribe, leave a comment if you're enjoying this type of video. Why we need more stimulus, okay? And the reason we need more stimulus, the answer to that is simple. If we do not have enough stimulus, the market will crash, and it'll crash very badly, okay? And nobody right now wants it to crash, okay? Secondly, the economy, it's recovering, but it still needs a lot of help, okay? Unemployment is still double digits in terms of percentages. The people on unemployment benefits are still very, very large. And so if they just cut it off right here, then we could see a potential, worse than the Great Recession, probably even depression-style economic crash, okay, guys? And if you think back in history, you'll know that they did mess around quite a bit, and the first part of the stimulus was actually rejected, right? It was vetoed. And as a result, that actually caused the market to crash, 10, 12, 15% in the space of 2-3 days, right? Which was abysmal. And then if you actually think about when the market actually bottomed, it didn't actually bottom until the second round of stimulus was passed, and then it bottomed about a month after that, okay? At 683 points. But what we can infer from this was that because the different parties, the Democrats and the Republicans, they couldn't come to a consensus the first time around, that's what caused the first leg of the crash, okay? The second leg of the crash was the market didn't think the stimulus was potent enough, okay? And, obviously, as you guys know, the market loves low interest rates, the market loves the Fed pumping stuff up, and the market hates uncertainty, okay? And I can tell you right now, if Trump wants to get reelected and become president again, then they're going to absolutely need to keep the market and the economy afloat. Otherwise, you can kiss his presidency goodbye, and he knows that, right? And so this is exactly why more stimulus is very important for not only the economy, but also us as investors, the stock market. Now that we know why we need more stimulus, let's actually talk about what could come in the next stimulus bill, okay, guys? And I wanted to take you through the different components of that. And obviously they haven't met yet, and there'll probably be a lot of debate, but these are the current, the most popular options. And before we get into the macro coronavirus economic data, I wanted to make a quick shout out to my broker, Hatch Invest, who have kindly decided to sponsor this video. They are my favorite broker, and I've got a link in the description below where if you deposit your first $100 or more, you get $10 credit. Obviously, the exchange rates are great, and $3 per trade is very, very reasonable. And also, guys, just to remind you, obviously none of this is financial advice or the opinion of the video sponsor. They're simply just a platform that I prefer to buy and sell my shares on. And as always, this is only my opinion. The video is for educational purposes. Always do your own research before buying anything. These are the sources that I'm using to track the data on a daily basis, okay? Because what I'm looking for very specific cues to help me understand whether the situation is out of control, manageable, barely manageable, or comfortably manageable, okay, guys? Because this is going to largely dictate whether or not we have another round of shutdowns. Maybe not the whole country, but perhaps more blue states than red states. That kind of just depends on Trump and how everything goes. Okay, guys? So the sources that I want to take you to, I'm going to show you 5 sources that I believe are very reliable and very useful. And I think that if you want to sort of do like a macro recovery play, these are some of the sources that you should be looking at as well as part of your research. The first one that I wanted to take you through is a project that's done by both Deloitte and DataWheel. And the reason why I really enjoy this is because it allows you to get to a high-level snapshot, but also very granular, and allows you to be very selective with what states you want to look at, okay? So, for example, let's say I want to add New York and New Jersey to that. That's cool. I can then move down here and then actually look at what the mobility is looking like, right? And I can actually highlight down to the granular level the mobility, but also things that are very important to me like retail and recreation, because I hold stocks, like Ulta Beauty, I hold stocks like Weight Watchers, etc., etc. And so this then helps me to understand, okay, well, what are people doing? Where are they spending their time? How does this activity compare with, the more stringent periods back then? What's the trend, etc., etc. Okay, guys, and it allows us to look at, workplaces. Okay, for example, whether people are buying groceries in pharmacy, how that's trending. So just to try and get an idea of where people are going and where they're spending their money. Okay, so I think that this is very, very useful. The second thing that it allows us to do is it allows us to look at, well, the employment data, we don't really, we can get that anywhere, right? But it also allows us to look at over here, hang on a second, the infection data and the case data, right? So it allows us to get a logarithmic or a linear snapshot of where the cases are going in which states and what the trend is. But then it would also look, and the thing is, new cases, that's old news, right? So that's not going to scare the market. What's going to scare the market now is it's moved from cases to hospitalizations and deaths, okay? So it then allows me to form a view, well, are the hospitals actually being overrun as the media claims it, because that's fear-mongering to get clicks, or, is it perhaps not as bad, right? So then it allows me to get to there. Then if I want to get a little bit more granular, I actually move into the individual states, okay? And I put these 5 states because, these are the, big GDP states, lots of people, etc., etc. So let's take the Miami-Dade Reporter, for example, okay? This actually allows me to get a daily snapshot of what's going on, and then I can actually compare over here, so let's say if I wanted to change the date, I just change the day from 09 to 08, all the way back, and I can actually track that. And it actually allows me to form a view of, so for example, maybe how bad the percent positivity rates are, or perhaps if you look at the new positive cases. But what's even more important is it actually allows us to look at the admissions on a granular level. And then on top of that, it allows us to understand, what portion's coming from nursing homes, what portion's not. But this is the good stuff, right? This is the golden nugget, whereby you can actually have a look at what's the trend of the beds, okay? So we're talking ICU beds, non-ICU beds, backup beds that can be converted to ICU beds, ventilator utilization, the number of inflow patients versus discharge, so essentially helps us to form an idea of how much runway they have and the rate at which, these resources are either being inundated or overwhelmed or, just used normally and they are within capacity, okay, guys? And so, this is for Miami. We then have the Texas stuff over here. Again, very, very similar data. But the ones that I really, really focus on is, the hospitalizations, the deaths, but also the comments that they're making, right? These professionals are making. So what phase are they in, okay? And right now, obviously, for Texas, they're in phase 2, and the media keeps saying they could be overwhelmed within 2 weeks, but they've been saying that for a whole week. So looking at this actually helps me understand, well, actually, it looks like they probably got another 3,000-4,000 beds here, as I guess, sort of wiggle room, if you can say that, right? And then it also allows us to look at, well, what are their comments, okay? So what is the actual hospital saying, okay? And, they make some really interesting comments. They're saying, look, they're used to operating at close to 100% capacity. It helps us to understand whether their PPE equipment is enough. So there's a lot of useful information here. Now, I'm not going to sort of go into each granular level of detail, but I just think that this allows us to get a better view rather than looking at the media sensationalism of, this might be overrun, the hospitals are too much, ICU beds are at 90% capacity, but in comparison to what, right? What's the context? And the same thing goes over here. So this is the LA County one, available ICU beds, total beds available, broken down by LA County, and also ICU and non-ICU. And as you can see, what I'm seeing here is, yes, it looks bad, but it looks manageable, right? It looks like things are going, and yes, there might be a bit of strain, but if we look at the availability of the resources, and like I said, you guys can view this in your own time, it doesn't actually look that bad, right? And what's also interesting to note is that, the average length of stay for, except your people over 55 and 65, there's sort of 2-3 days for the younger crowd, right? So again, it doesn't actually look that bad when you compare it with what the media is presenting. So I just wanted to give you guys another view of how I'm viewing this whole sort of situation, okay? And then how that then helped me to, I guess, guide my investing strategy and the buys and sells that I make. All right, guys, so in conclusion to the video, that's some of the important data that I wanted to show you, and I really hope that it's going to help you guys make a more informed decision as to, what could come next for the economy, the reopening or the reclosing down, whatever whether you guys are bullish or bearish. But my view is, at the moment, I am bullish but cautious, right? So cautiously optimistic, because things look like they are manageable, and there are many things at very, very low prices, whereby, I believe based on the current data, the risk reward is in my favor to selectively buy stocks and sectors that are beaten up, that I believe will have a good recovery, okay? Having said that, obviously many things can change. Things can get out of control, and hospitalizations go through the roof, deaths ramp back up, then that's a different story, right? Then we're, probably going to head for another shutdown. The other thing is, look, elections are coming up in November. The nation's not very happy with how Trump's performed because of the whole virus thing. If he gets elected out and Biden comes in, corporate taxes are raised, that's not going to be good for the market, okay? Maybe a Democratic president might be more open to locking down and then creating something like universal basic income, whereby they perhaps maybe try and reset the health system before they reset the economy. Then that could be a disaster for the stock market in the coming few years for the USA, just depending on how long it'll actually take them to reset the virus situation. So guys, look, I hope that's been useful, and that's some of the data that I wanted to share with you, and then how that then relates to the need for stimulus and why stimulus is absolutely critical to keep the markets and the economy flowing. So hope you enjoyed the video, and until next time, happy investing.